The market saw a lot of drama today. The VIX, the Fear and Volatility Index, spiking above 22, big hedge fund managers selling off their NVDA positions, and investors worrying about big companies issuing debt to expand their AI projects. Now, we're going to talk about if the market is overvalued right here. Should we be worried about the NVIDIA earnings coming up on Wednesday, and my overall take on the markets. I'm also going to talk about one position that I increased to 97K. So let's go ahead and jump into it. Remember, this is not financial advice. I'm just sharing what I'm personally doing for educational purposes only. Results may vary. Now let's take a look at the account. As you can see, we've dipped down quite a bit today, right? Down back under 1.4. Now, if you want to follow along my 8-figure journey in this portfolio, be sure to be subscribed to the channel by clicking the subscribe button down below if you aren't already subscribed. Also, if you get any value out of this video, please hit the thumbs up button for me. I would greatly appreciate it, and I appreciate you being here. So I want to jump straight into it. Remember, I do give away free trade ideas on my Instagram, my X account, and if you do want to work with me one-on-one and join my high-level mastermind of 620 members, that will be at the top of the description. We have a free training here as well as all of our client testimonials that you could check out. So let's go ahead and dive straight into it, okay? The AI boom is lifting the stock market, but may it be masking a weaker economy? We're going to be talking about this. Is the economy growing? Should we be worried about a shrinking economy and a stock market that potentially could be at a top here? Also, Amazon issued $15 billion for the first time since 2022. So they issued debt to cover, if we look over here, $3 billion of that will be used for everything from acquisitions, capital expenditures, to share buybacks, okay? Now, they've done this in the past before. One notable time that they did this was when they acquired Whole Foods. They issued debt to acquire Whole Foods. So this is a normal thing for companies. Also, you know, with big companies with amazing balance sheets like this, I'm not too worried about it because they have some of the smartest minds working in the company. They wouldn't be issuing debt for something that they didn't think could lead to more profits later on for investors and shareholders. So not too worried about that, but I know that is a worry for a lot of people. So if we take a look at the Atlanta Fed GDP Now data, they just released an estimate of a 4.1% GDP for November 17th for this quarter. So that is very good. The economy is growing. As you can see, their estimates, right, are growing for the US economy. So the economy is growing, so there's no issue there. Now, another issue is, well, are we overvalued on, the S&P 500? Are we trading at valuations that are way too rich here, that are resemblance of the 2000 dot-com bubble, okay? So current PE ratio, price to earnings ratio for the S&P 500, which is what investors are willing to pay, a multiple they're willing to pay to own the S&P 500, is around 30, okay? So the PE ratio, average PE ratio of the S&P 500 right now is 30. Typical PE ratio is somewhere, in the low 20s. So we're definitely a little bit higher, but if we look back at 2021, okay, the PE ratio got all the way up to 39, almost 40. And then also in the past, like back in the dot-com bubble, the S&P 500 PE ratio was 46, okay? Now, yes, we are a little bit trading at richer valuations than normal, but if you look at how much money was printed back in 2020, okay, that is drastically affecting valuations, all right? So we're not even overextended. I think that this PE ratio could have gone way higher had it not been for the Fed increasing interest rates and ending the rally that we had in 2021. So if we look at the M2 money supply, all right, currently there is $22.2 trillion in circulation. 7.5 trillion of that is just sitting in money market funds waiting to be deployed. So the PE ratios here could get a lot higher than we are seeing them right now, considering that the Fed printed so much money back in 2020 that is still sidelined. So there's definitely companies out there that are trading at really, really good valuations. American Express, Google, that Warren Buffett just purchased, and many other companies. You just have to be more selective about the companies that you're getting into and making sure they're not trading at super rich valuations here. So right now is really a stock picker's market, selecting stocks that are trading at fair valuations. And yes, there are some that are definitely way overvalued and have zero earnings, such as Oklo, Rigetti, and some of these other high flyers that I tend to stay away from. But as far as the market goes, we can go a lot higher here, considering the fact that the Fed is decreasing interest rates, okay? We are getting rate cuts. If we look at the CME FedWatch tool, yes, December odds are technically over 55% today, so technically they are still on the table for a rate cut in December. I don't think that's very likely. I think that the rate cut is definitely going to happen sometime in January, as the odds are 80%. Another one coming for June, 91%, and then another one in October. So 3 rate cuts in 2026. And Jerome Powell is out of office in May, so someone else is going to be appointed by President Trump. So I'm thinking that the market will definitely go much higher throughout 2026, and potentially sometime between mid-2027 is when I'm expecting inflation to unfortunately come back. And at that point, obviously, we will be adjusting our strategies, but for now, I'm taking advantage of the fear right here. So if we take a look at QQQ, which tracks the NASDAQ 100, we are back down to that 600 level right there at that trend line support. So if we do break it tomorrow, which could be a one last flush possibility, I think we're headed down to 588, okay? Now, again, I have cash on the sidelines ready to take advantage of this. And how is that possible? Well, I follow the VIX cash allocations. If we look at VIX, we spiked up higher than we were on Friday, all the way up to 23 today. Okay, and tomorrow, who knows? We could be at 25, 27, maybe even 30 if we get a really big flush before NVIDIA earnings on Wednesday. So what I like to do is look at my levels. So if we look at the VIX cash allocation levels, we're currently trading right here. There's a lot of fear in the market right now. A lot of fear. And I believe that institutions are pushing this news to shake retail investors out of their positions, because this run-up has been mostly retail investors. And I believe institutions weren't positioned and weren't ready for this. So that's why I think there's so much fear right now. They're really pushing the news outlets. And right now, essentially, I could have 10 to 15% in cash. I have about 10%. So I'm very aggressive, and I still have cash on the sidelines ready for a potential flush tomorrow, or who knows, later this week. But I'm going to take advantage of that opportunity. So my expectation is, if we look at QQQ and then we go to what the market makers are predicting, okay? If we look out, I like to look out 14 days. All right, the market makers are predicting a plus or minus $24 move. So definitely higher than, higher than normal. So technically we could go all the way down to like 576. So somewhere down here, essentially, if we got down to that level, 576, we'd probably just flush. If we broke down through 588, we'd probably flush down to this area, 572, 571 for a bounce, okay? So that there's a lot of support at that 571 area. If we look at how big of a pullback from all-time highs that would be about a 10% correction, which this market definitely needs. It definitely needs a healthy correction so that we could head up higher for that Christmas rally. So I wouldn't, I would welcome that. But odds are, okay, I'm playing the odds that the lowest we go is 588. Okay, but just, on the upside, 624 is what the market makers are expecting. So 624 would be about right here in the next 2 weeks. So we really have kind of a wide range, a lot of volatility going into Wednesday's NVIDIA report, which I think can really move the markets here. So I'm playing it more bullish. Long-term, 2026, I think that the market's going much higher with interest rate cuts on the way, GDP growth positive, right? The economy actually growing, and companies actually reporting decent earnings. So let's go ahead and talk about it, okay? So NVIDIA CEO Jensen Huang surprised investors with a $500 billion forecast, and that's going to be mentioned around earnings. So some things to note is that NVIDIA reports Wednesday expectations of $1.25 earnings per share, $54.9 billion in revenue for the quarter, okay? And Jensen Huang said that NVIDIA has $500 billion in chip orders for 2025 and 2026 combined, $500 billion. So just things to look out for. NVIDIA made major deals, 10 billion into OpenAI, 5 billion with Intel, 1 billion into Nokia. And then China remains kind of uncertain right now, which represents about 50 billion in annual revenue opportunity for NVIDIA. So we'll keep an eye on that. What we're looking for in NVIDIA, and the nice part about NVIDIA right now is that the stock is really tanking, right? Peter Thiel apparently, sold off his stake. SoftBank sold off their stake to invest in OpenAI, which is a very, very aggressive AI play. Okay, it's not that these people or hedge fund managers are selling it off and putting it into bonds or into a safe play like Berkshire Hathaway, right? They're reinvesting it into more aggressive plays. Apparently, Michael Burry was shorting NVIDIA. That wasn't a good call. He eventually shut down the company, as reported last week. So, I don't know if he got shaken out of his position or what. But my thesis on NVIDIA here is that because we've came down quite a bit, that actually is better for the stock going into earnings. Because previous earnings, if you look at it, okay, we were trading near all-time highs. It popped up a little bit and then it sold off, okay? This one, we were trading near all-time highs out of the tariffs crash, popped up and then sold off, but eventually, rallied more. And last year was kind of the same thing. It rally into earnings and then sell off after good earnings news. So right now, since investors are kind of spooked, they're selling off their NVIDIA now. So if NVIDIA earnings come in really good, I expect the stock to pop up. Now, we could take a look at the current position. Okay, you're going to see that I put my money where my mouth is. I have 188K in cash secured puts on NVIDIA, and a lot of them are in the money. So I have the 190s and then the 182.5s. Now, expected move for this Wednesday is plus or minus 14. So essentially, NVIDIA stock could go all the way down to 172, or it could go back up to 200. I'm expecting a 200 play from NVIDIA. I'm expecting the stock to actually go up. So that's just the current position. Now, if I wanted to play this, for earnings, I would probably go somewhere to 172.5, 175 and pick up a potential 1% or 1.3% in 4 days, okay? That would be my play, a safe play with the potential of getting assigned and being okay getting the stock at a discount there. Now, if I didn't want to get assigned, I would just go down to the 170, collect $136 for a potential 0.8% ROI in a couple days and just take my money there. But since I'm bullish on it, I don't mind getting assigned at 190, and I'll just sell covered calls and ride this stock up. So again, I think that NVIDIA is primed for a good setup here. And if NVIDIA does report bad earnings, yes, on QQQ, we're probably going to see that flush. We're probably going to see a flush to 588, potentially even down to 570, but I think that's very unlikely. I think 85% chance NVIDIA has good earnings, the stock pops up. 15% chance they have bad earnings and the stock does go down as well as the whole market. But again, that's why I have cash on the sidelines prepared for those opportunities, because long term, I think once everyone gets flushed out, if that did happen, we go up in 2026, okay? So, fear is already high, and that's the play. Now, let's talk about another more aggressive play I made today. So, IREN is very far off its all-time highs, and this was something that I took advantage today. So, the stock right now is down about 38% from all-time highs. They are officially a positive earnings company, PE ratio trading at 24, which is a super low valuation, okay? And the stock was actually up 2.24% today. So I saw this as an interesting opportunity because QQQ was down almost 1%. NVIDIA was down over 2% at one point today. And IREN went green. So that was very interesting to see, considering that this is technically a more risky and newer stock, okay? But they have good valuations. And there was some news that came out. Institutional ownership has increased drastically, including JP Morgan Chase. So I kind of read into this and I said, you know what, why not just take advantage right here? And I was very, eager to buy some Leaps call options here at the lower Bollinger Band. But what I did instead for a safer play was I actually added more cash secured puts. So we currently have a 97K position and I added 6 43 puts to collect about 3K in 32 days. Okay. Now, if I were to do it again, I would go out to December 19th and I would probably go up to the 44 strike, collect $500, which is a potential 13.4% ROI in 32 days. Okay. Now, if obviously results vary, if the stock falls down below 44 in 32 days, I would be forced to buy 100 shares per contract, but I'm fine getting that discount because I think long-term, IREN is a huge play as far as energy, okay? They have so many energy contracts. They're, basically optimized to mine Bitcoin at a good cost. So now they are renting out GPU data, AI, basically AI cloud space to all of these huge companies. So IREN is one of the favorites in the portfolio right now. I increased the position. Yes, it's a higher risk play, but I'm willing to, take the risk here because we are down lower Bollinger Band, almost oversold on the RSI. RSI looks like it wants to form a bullish crossover here, and MACD momentum is pretty much at the bottom. So IREN is the current position that I'm very, very excited about in the portfolio, and I upped that position. Okay, now Hood, just to give you an update here, Hood kind of breached down below this trend line to 112 today. Unfortunately, because Bitcoin is down quite a bit and Hood does have correlation to Bitcoin, Hood got hit a lot harder today than most of our other stocks. But I think once Bitcoin kind of bounces up, I think Bitcoin, if we just give a quick Bitcoin update, could fall all the way down to 87K. Absolute low. We're already oversold on the RSI. In fact, it could bounce up on a good NVDA news. I think Bitcoin will kind of head back up. So maybe we see at 87K, maybe we don't. But either way, I think it bounces back up quite a bit, back up above 100K, which will fuel a nice Robinhood rally, probably all the way back up to this upper trend line right here. So very bullish overall on the markets. Fear is high. This is the time when, if you follow what Warren Buffett says, he says, be greedy when others are fearful and fearful when others are greedy. I'm getting greedy right now because there's lots of fear, lots of people selling. And unfortunately, probably going to get, those people are going to regret it once this market rebounds. So that's going to be the update. If you enjoyed it, give it a thumbs up, and I'll see you in the next one on Wednesday. Take care.